We should put this in context, right? We were hitting highs pretty much daily for Stock 600 a week back. So we had a very strong performance, obviously, year to date. And I think it's just a reassessment broadly on the macro. We've obviously had some weaker data out of China. We've seen some regulatory tightening specific to areas of tech and education and so on in China coming through, and that's affected some of the China exposed plays. So obviously we've seen luxury goods this week, and that explains, I think, part of the CAC, obviously given the heavyweight there. And we've seen commodities as well as another China play come back. And more broadly speaking, in the rest of the world, we have, as you were just hearing from that report, these concerns over the Delta variant, right? So we're having these concerns that maybe the opening up is just delayed and mitigated a little bit by this Delta variant being more transmissible and therefore maybe slowing down some of the reopening trade. So I don't think this is a regime change. I don't think this is a major block for us. I think it's more of a little bit of a headwind in terms of the recovery and the broader reopening for equities. And that's what we're seeing.
Nick, if I could just zero in on the luxury sector for a moment, because we did see extreme selling in what is a much loved part of the European markets. And we often liken it to the technology names in the United States, where these particular names can do no wrong. To what extent was this due to the language we heard out of China about copious amounts of wealth and just trying to even up the economy? Was that why we saw some selling taking place in luxury?
I think that's part of it. I mean, if you look at luxury goods in Europe, as you say, it's kind of our tech sector in a way, in the sense of its high quality structural growth. We obviously don't have much market cap in tech compared to, say, the S&P or some of the Asian indices. So people have looked at that, and if you look at the relative performance on a 2-year, 5-year, 10-year chart, it's been stellar. And yes, I think those comments may have caused concerns. About a third of sales for luxury goods from European companies come from China. So, there's obviously a relatively high exposure there. Having said that, these companies have now diversified, moved to more online businesses, been more innovative with product, and are clearly in a different place than where they were 5 or 6 years ago. But previously, when we've seen kinds of comments like this or concerns over how Chinese consumers might spend their money, that this has obviously been a sector that's been impacted by that, but obviously still has those structural long-term growth dynamics, which are very valuable.